Bitcoin price is down sharply and people are asking themselves, is it time to buy or is it time to wait for even lower prices? And what are the risks of a major bear market? Well, unfortunately, the drawdown right now is about 40%. That's the difference between the very high to the current price. Now, normally, the drawdown is going to be limited to about 32% in a bull market. At least it has been the norm here since December 2020. Now, if you go back to 2017, when we had the last sort of very strong bull market, you can see as well that the drawdown, would be limited to around 32%. There will be some occasions like here in July 2017 and as well here in September 2017 where we saw drawdowns of about 41%. So that's where we are right now, actually. So maybe, this is just a short-term move and then we're just going to bounce back. But what is interesting is that ultimately at one point what happened, so the drawdown just turned worse and worse, and then it just fed off itself. So we need to pay attention now over the next couple of weeks if this is going to happen, that the drawdown just gets worse and worse. Last time we slid with about 84% or so, and there's a heightened risk that that's going to happen again. So what are the signs that that's indeed is going to happen? Well, if we ignore the drawdown measure for a while, you can see that we have a big low here from January. That level is at about $29,000 per coin. If we trade below that level, then it will be rather easy, I think, for the market just to potentially trade out to 20,000 and even more, and you get yourself your 80% slide. So this level is important. We also know, if you just look at the chart here, that we're stuck within a triangle. And that triangle has the pattern of a target of $35,000. So I would say heightened risk of a major bear market, at least in the short term, maybe go down to $35,000 per coin. And between these two levels, 29 and 35, one could potentially see a bounce. And maybe that bounce is going to lift us maybe back up to the breakup point or so around $50,000 per coin, which is a significant move. So you can still make some decent money just buying here for this to go up higher. So long story short, realistically, lower prices in the short term and also heightened increased risk that we are in a long-term bear market. But we don't know for certain just yet. So let it come down a bit and then one could potentially, if one is willing to take some risk, buy a bit down here and then maybe trade it up to 50 and then we'll see. If it sharply turns lower again, that would be an indication really that the bear market is here to stay. Now sometimes people just like to buy when we touch the first level and then that's it. But it's better, I think, in this current situation and climate, is just to wait for very short-term end of the downtrend. So if you look at the very short-term downtrend, you can see that we're creating lower and lower highs. And as long as we are creating these lower highs, there's a heightened risk we're going to continue to trade to the downside. This idea of combining a short-term chart with a long-term chart is called multiple time frame analysis. And it's something I've been using successfully across many different asset classes for many years. Alright, if you like the video and you like these kind of updates, don't forget to subscribe to our channel and don't forget to like the video. Bye-bye.